So good afternoon everyone. So we've had, going back in the past, we had Whitlam versus Fraser, we've had Hawke versus Howard, now we've got Shorten versus Morrison. Not really the same type of names, are they? A little bit, not the same aura about it, but that's what we've got. So welcome to today's session. What we're going to talk about today are the Labor tax changes. There's not really a lot of information to go by, it's just really just some policy notes in the LP website that we've got, and basically there's no legislation, no one's been elected, so today's more like an awareness campaign in terms of what are the policies. In your handouts that you do have, there's a summary there of 12 different policies the ALP will introduce with a comparison in relation to what the Liberals, I suppose, the Liberals offer as well. A lot of those Liberals aren't really more Labor policy than Liberal policy, so something that we'll go through today. But we're going to focus on probably the main ones out of there, which hopefully will affect a lot of people in the group here. So let's sort of, we'll start pretty soon. But just to give a bit of odds in terms of the election, looking at Sportsbet today, the election's on the 18th of May according to Sportsbet, not sure whether that's accurate or not. But Labor is $1.18 to win, Liberal $4.50. The next one down to Greens at $201. Of course, Australia's answer to Donald Trump is at $275 to win. So you count those two out, it's really Liberal versus Labor, and always has been, always will be. So let's start the session today. We'll look at the first topic, which is changes to taxing of trusts. And these are discretionary trusts. So we'll just look at what the changes are. And there's an example which we'll go through, so don't pay too much attention to these notes here. The first one is that the way that discretionary trusts work at the moment is that when you distribute to beneficiaries, the beneficiaries have access to the tax-free threshold. So you've got different ranges of tax from 0% up to 47%. And if you distribute to someone who's on a $20,000 but no other income, that's all tax-free. What the Labor is proposing is that the tax rate will be a flat 30%. If your marginal tax rate is less than that, you still pay tax at 30%, no tax-free threshold. So that's going to be a major change to trust, which hasn't really received a lot of press. And we'll go through an example, very basic example, as Bella tells us if that will work. So what happens with the higher the beneficiary's marginal tax rate and the 30% tax rate. So what happens in the situation where you distribute to a beneficiary where their tax rate is at 47%? They'll still pay tax at 47%. The 30% is irrelevant. That's just the minimum tax rate that will be charged. The commencement date, from what I've read in the research I've done, they're proposing 1 July 19, which will be shortly after the election. So obviously it's got to go through the Parliament and the Senate and everything else. And a little bit later in the presentation, we'll sort of look at how that's all going to play out in terms of balance of probabilities. So that's in terms of a nutshell, in terms of what the changes to the trust are. To look at the different type of trust in terms of what's included and excluded. If you look at the left-hand side, obviously discretionary trust all included. Hybrid trust. What a hybrid trust is, it's a cross between a unit trust and a discretionary trust. So that type of trust will have fixed elements where a distribution of income will flow through to various people on a fixed rate. And there's also the ability for the trustees of that trust to distribute at a discretionary rate. So that's what we call a hybrid trust, because it's a cross between a discretionary and hybrid. A testamentary trust is not excluded, is excluded from these rules. So a testamentary trust is what happens on death. So in your will, if you say that you're going to set up a testamentary trust so you can quarantine, I suppose, the asset to that trust to certain beneficiaries, and then any distribution from that testamentary trust will not be affected by these rules. Farm trust, where there's farms, farmland, farming business, those trusts won't be affected either. Charitable trusts and public unit trusts like the one you published through Westfield or whatever else. So the main attack is really on discretionary trusts. And it is a major attack because you've got a situation, as we'll show on the next slide, this is the current law, and on the left, on your right-hand side is the proposed law. So under the current law, there's three taxable income, $160,000. We've got three different beneficiaries. One whose only income is $20,000, one whose only income is $100,000, or one who's on $40,000, three different tax rates. So if you distribute to the person on $20,000, no tax, $100,000, $26,000 worth of tax, and $40,000, $4,600. Total tax payable, $30,000. If you look at the proposed law, total taxable will be $48,000. So you can see from that very basic example, because we're not using the tax-free thresholds of beneficiaries, the tax is going to be significantly higher. So what that means for us is that we've got to start looking at, I suppose, strategies. Common things what happens with discretionary trust with people in business is that the owners of the business do not pay themselves a salary, for example. All they receive is profit distributions, so that way they avoid payroll tax and lawyer cover and superannuation obligations. But it may be that those people now do receive some form of salary, whether it's $20,000 or $40,000, so that way then they can actually use those tax-free thresholds now and pay a little bit less tax. So then that's going to be those type of strategies, if this law does go through, and it is in it, that's what the type of things that we do have to look at. So it is a very major change. Back in 2000, when the government at the time, I think the Liberal Party wanted to tax trust as companies, and that didn't get through, and they had pretty much full control of parliaments back in those days. So just something to be aware of. If you do have trusts, then obviously something you have to put your mind to. If once the election happens and Labor gets in and they do control the Senate, and then there's something that we really do need to strategise quite carefully, considering the change will be from the next financial year if they do get through. Any questions on that, just as a aside? No? Okay, so why the attack on trust? So I'll just read this out, I won't spend too much time on it. From the Labor analysis, it shows that a disproportionate amount of discretionary trust distributions are allocated to people in the lowest marginal tax bracket with little or no work income. These are likely to be non-working members of the family, such as spouses and children in tertiary education. And that's something I think as accounting professionals we sort of can relate to that quite strongly, where we do use a non-working spouse to stream income. That's the purpose of what a discretionary trust is. So, but I mean, the question is, I mean, that's okay to attack trust and everything else, but why do we use trust anyway? I mean, it is a fundamental structure of a lot of Australian taxpayers who have businesses or who do invest. One is we look at succession planning. A trust does last for 80 years. In terms of the discretionary element for it. Once 80 years does happen and that trust is vested, the trust doesn't disappear, it just turns into a fixed trust. A lot of people don't really realise that, and the beneficiaries of that trust are the specified beneficiaries. But what that means is that if the main people that trust is control it, they pass away, the assets are still retained in that trust. So it is like the succession plan where you don't have to transfer assets out to anybody else. If it's structured correctly, it's really used for the benefit of the family and future generations. So that's one very significant advantage of the family trust. But I must say, as an aside, is that what I find generally, in terms of, I suppose, being in practice for 30 years, believe it or not, in public practice, a lot of clients in my experience don't really understand in terms of succession planning of trust either. Because the trust is really controlled by not the trustee, but what's the person called the appointer of the trust. And it's all in the trustee document. And what that means is that the appointer has the right to hire and fire a trustee, and therefore they can appoint anybody they want as trustee. And therefore the appointed can actually appoint themselves, control the assets, and if there's some type of family split or family disagreement, distribute all the assets to themselves potentially. So that's an area which will still need a lot of focus, I think. There might be a different type of seminar that we do hold about how to control it. Asset protection, everybody, I would imagine most people be aware that trust is used for asset protection, so that way we put a lot of assets for people, particularly people in high risk occupations and businesses, into trusts, so that way their personal assets are all protected. Flexibility of distribution of income, they can distribute to a range of beneficiaries, as the previous slide showed. They can distribute to beneficiaries like tax brackets and really split the tax liability amongst a lot of family members. And the last one there, access to capital gains tax concessions, such as, well, we'll get through it in a future slide, any assets that you hold in the trust and you sell those assets for a gain, provided you hold those assets for more than 12 months, there's a 50% tax exemption on the capital gain. And if you're in business and you're a small business and you sell that business, and then any capital gains tax that you do make, there's a raft of concessions that you can use to potentially have the capital gains tax reduced to zero. So there's 4 valid reasons why we should have trusts. What the Labor is proposing is we're just going to try and get a bit more money out of those beneficiaries, and that's what they're trying to do, just to balance up the budget a bit. Any questions so far? All good? Okay, so what to do now? I think it would be wouldn't be very prudent to put in strategies as of today because we don't know what the legislation is, we don't know if there's going to be any carve-outs, we don't know the whole impacts of the legislation, we've only got that much of a paragraph in an ALP policy statement. So this is more an awareness, be aware of it. Once if Labor does win the election, and then we'll have to consider strategies and just review your situation and see what the impact will be first and foremost, because it may be a hit on your cash flow, and then from there, what steps we can do to mitigate the damage. So yeah, we're acting on it now. Will really warrant some consequences that may not be very beneficial.